Hey guys, it's Cam for Investors Underground. Welcome to lesson 7 of 8 in our beginner's trading guide. If you're landing on this video and you haven't seen the previous 6 lessons, you can click this green button here. It'll take you back to the first one. That's really where you should get started. We've been getting through so much information. I'm really proud of everything that we've been putting out for everyone. If you're not subscribed to the YouTube channel, you can do so here. You can click this button, subscribe. It just means that you're going to get alerts when I put out new videos and you're not going to miss anything. So we've got a heap of stuff to get through in this lesson. Nate and I are going to be co-hosting together. Let's kick things off and talk about what scanning is.
Trading is all about preparing. If you just turn on your computer and try to trade every single stock that you see, you're going to end up having either information overload or pretty much ticker overload. The key is to really take all those thousands of setups that may be available on any given day, but really break it down to only a handful at max of, what's the best, most highly favorable trade for you. And, different traders are going to have different types of scans and different types of results, but it's whatever's going to give you the best opportunity for the type of trader that you are. There's countless different ways to scan. You can do it each night, you can do it in the middle of the day, and there's even a lot of real-time type scanners that are continually producing results for you, but it's really about what type of trader you become. Do you want that information at your fingertips at every single second, or would you rather be focused on the big picture, maybe something that's over a couple days or a couple weeks? What scanning allows you to do is pretty much be prepared so that when certain actions happen, you can just react. And it gives you the conviction or the confidence that you need in trading to be able to go ahead and pull the trigger when you had planned to do so. Scanning allows you to find a handful of names that are of interest, but more importantly, it allows you to kind of have that first glimpse at it and develop a plan ahead of time. That way, as soon as you see it, you can react. It's one thing to just scan for movers or force like a quick trade when you see one, but actually preparing is what brings out those A+ setups that are going to give you the A+ style profit. After all, less is more. And the more prepared that you are, really the less that you need to trade. It's just fine-tuning your scans to pick up the trades that are going to give you the best results. Why is it important? Preparing is what gives you that extra nudge that says, hey, you've seen this before. There's a very, very high probability that you're going to be right. So just go for it. And, in the event that you're wrong, it was worth the risk for the potential reward that was out there. When you do the homework, it gives you the confidence to go ahead and just take that trade that you see. There's a lot of stocks that may come up on scan that you may see during the day. And, a lot of new traders will have a case of FOMO or fear of missing out. And you see it each and every single day. They just sort of want to be in a trade. But once you're in and you don't really have a plan, you don't really know where to stop out. And half of the battle of trading, probably more than half of the battle, is being able to cut your losses. And if you're jumping in head first without really a plan to stop or any idea at what point would I be wrong, then you're going to have an uphill battle. It's really best to wish that you were in a trade than wish that you weren't in. One of the most important things about scanning is it's giving you a chance to view the chart at least once prior to jumping in. So in the back of your mind, you have a general idea of what that chart looks like before you actually are in the name. So it's all about having familiar patterns and setups that you're familiar with. And there's so many different reasons to take a trade. So you kind of need to look at what you're trying to do on each and every single type of trade. What type of setup are you looking at? Is it a quick trade that was on scan last night that's an overly extended chart and it should have a quick correction out of the gate? If that's the case, then it's probably a quick day trade. Or is it a beautiful daily chart that's setting up for a multiple time frame breakout? For those that don't know what multiple time frame breakouts, don't worry, we're going to get into it. But if it's something that you might be looking at a bigger picture idea, well, it may be good for a separate account. And then, last but not least, if you're looking actually at a even bigger picture idea that may not be even a day trade or a couple day trade, but something that you feel is a week or 2 weeks or maybe even a month out, well, that might be something that's good for if you manage your own 401k, something where you might want to store it away for a couple months. Maybe there's some news that's due in 3 or 6 months and you think that it's going to run up into that. Well, you don't want that stock in your day trading account because you're going to be staring at it every single day. And as soon as it starts to pop, you're probably inclined to go ahead and take the profit and take it off. And the goal all along is to sort of hold it. So that's typically what I do. Is I usually have different accounts for different strategies. You really need to ask yourself these types of questions before you jump into a trade. To give you an example, anytime I'm thinking of only a day trade in a name, I typically would trade it in Wedbush or ETC in my center point accounts. And 99% of the time, I'm cash overnight. There are occasional times where I might hold a short or a long if I have a good average in that account. But most of the time, if I'm thinking a potential gapper, something that I might want to hold just overnight or maybe a little bit longer than just that typical day trade that I would take, most of the time I'm putting those into E-Trade where it's on a separate monitor than my main one. I'm not staring at every single tick because you'll find that a lot of times when you're staring at it and it starts to pop and it's doing exactly what you thought, you might start hitting the sell button because you're used to locking in profits. So for me to go ahead and let trades work beyond just the initial pop, I usually put them in E-Trade. And then last but not least, if it's a potential breakout that I'm thinking is going to take a couple of weeks to move, I'm going to put that in the 401k and sort of have that on the rightmost monitor where I'm not watching every single tick. I just put it in there, I manage it, but I sort of forget about it on a day-to-day type of time frame. Whatever the case, each account has a reason. And whenever I have a day trade that's in one of my center point accounts, if I start to think about, maybe I'll swing this. Well, that wasn't the reason why I went in the trade to begin with, because it's in my day trading account. So a lot of times what I'll do is think about whether I want to hold it. And if I do, then I'll go ahead and just buy it or short it in my E-Trade account and then cash up my center point account. So it really helps me because on a day-to-day basis, I can always just focus and not have anything that's over the weekend, anything that's overnight that may be up or down sort of affect me psychologically, staring at it all day and say, you know what? I started off $2,000 in the hole and it's separated and I can continue to focus on the trades at hand that given day.
Hey guys, Cam again. So one thing I've noticed that Nate does while he's using these 3 separate kind of segmented accounts for different strategies is that the longer that he's planning on holding it, the less size that he'll use on that trade. So for example, if he wants to trade 1,000 shares of something intraday, no problems because he's got stops set and he knows his risk and it's all defined. Whereas if he wanted to swing something of the same ticker, then it might be 200 to 300 shares because your risk is a little less defined and you're going to be holding it for a lot longer. And then in the 401k, it might be 100 shares or something like that. And this is basically to reduce variance and mitigate some of the unknown risk that is associated with holding stocks for a longer amount of time.
The next section is what makes a chart interesting. What type of charts are we interested in? And what's the importance of lining up on multiple time frames? So one main topic that I talk a lot about in our educational videos is what creates the biggest audience on a name, referring to when the most people are going to be watching it, when it's the most liquid, when it's going to have the most volume. And the short answer is when there's all different types of traders watching it. And maybe even investors. Maybe there's a fundamental aspect where a PR hits. But from a technical standpoint, it might be a great daily chart setting up for a major breakout. But that same day, it looks like it's starting to set up for an ABCD breakout. And couple that with a potential whole number breakout, maybe a 52-week high. And all of these things put together create a bigger and a bigger and bigger audience. And that's where I like to focus on because that's where all the emotions are going to come together, all the fundamental type traders, all the technical traders, and it's going to be that much bigger of a move versus something that's just, trading a few thousand shares here and there, and nobody really cares. So it's always important to, at least for the type of trades that I make, look for liquidity, look for stocks that are trading a lot of volume on their own. And these can all be found by doing scans the night before, looking for charts that are nearing either a breakout or a breakdown, and then coming to the market prepared so that when you see them intraday on different scans intraday, you can react that much faster. The setups that we like the most, at least myself, is the multiple time frame type of breakout and momentum. Personally, I love seeing a daily chart set up the same way that I like to see an intraday chart. So those of you guys that have been watching, through this series and whatnot are probably familiar with an ABCD type of move. Most of the time I cover it talking about intraday, seeing it intraday, seeing it on the 1 minute chart. But when you see it on the daily chart where it might have had a move last month, it started to pull back, started to consolidate, gear up back towards those highs, couple that with the intraday type of move that we cover on the regular, then you're going to have a multiple time frame. Two different time frames coming together towards a breakout is going to have that much bigger of an audience. Another one on the short side is overextended names. Now, scanning the night before is going to provide you with a big list of potential trades. So, typically if you want to short a parabolic style move on an overextended type of chart, typically you'd be looking for a stock that's broke off some type of consolidation and it's just continued to head higher and higher and higher and higher, and it has yet to correct. Now, it doesn't mean that it can't continue to go higher. However, typically at some point when it starts to speed up to the upside, starts to go in sort of a parabolic type of move, which is a move that is faster relative to how it's been trading prior, usually there's a pullback of some sort. And that's what we look to take advantage of. So if you're doing scans the night before and then you come to the market in the morning and they're gapping up to continue to break out, those are your main watches. Another one is setups that are either breaking out or breaking down off of some type of consolidation. Now, the reason that we care about these is typically when a stock is flatlining for some period of time, which could be considered a channel, it could be considered consolidation, it could be stuck in some type of range, let's just call it 50 cents. Well, when it breaks out of that 50-cent range, there's a good chance that whatever candle it makes, whether it's the upside or to the downside, it's probably going to be bigger than that. It's going to be bigger than the 50-cent range. And that's why we're focused on when stocks are starting to trend, starting to break out, because what we care about is momentum and range. And range is where you make your money. If you want to trade a stock with, 3 or 5 cent range on the day, by all means do it. But, that's not what we focus on. Many times these setups are preceded by increasing volume that slowly builds up into a major volume day. And that's typically the day that I'm looking to trade it. So now that you know what type of breakouts and scanning results that we look for, how exactly do we actually find them? So Finviz is a great website that I use. And the best part is it is free. There are a bunch of annoying ads, but you can at least still do, what you want to do if you don't want to pay for it. However, if you do pay for it, you don't have the ads, you get real-time quotes, you can run them throughout the day, and it's not 15 minutes delayed. It's a perfect scanner for at night. I would consider Finviz a technical tool that I use. There is a lot of fundamental type stuff on there. You can get lots of information as far as the float, outstanding shares, news, upgrades, all that types of stuff. So their elite version is nice, but it's not a necessity for scanning at night. You can use it intraday, and if you are going to, I would suggest going ahead and paying for it. But if not, it's just 15 minutes delayed, but it's going to produce some great results for you. One thing I like about it is you can see all the charts right there, and you can do it in 10 charts per page or all of them on one page, and it allows you to kind of like pull them up real quick and see if there's something that interests you.
So let's take a quick look at the Finviz platform itself. On the homepage, you've got a lot of very useful information, in my opinion. And this is really good for checking out stuff intraday. I like to scroll through this area here and kind of have a look at stuff that has abnormal volume and abnormal range. And the fact that it's on this list is kind of self-perpetuating in that a lot of other people will be looking at it and looking for setups intraday to be able to trade off. That's what creates momentum. You've got stocks that are beat up over on this side. It's all pretty cool. So now we're going to go into the screener, and we've got a few presets saved here. We'll have a look at the green scan. And I just wanted to show you guys the parameters that we use to start filtering for charts that we think are going to be interesting. So what Nate does on a daily basis is goes through, all of these charts and has a look. And there are pages of these charts, but he'll go through while he's creating his scan for the Investors Underground members. And out of these 100 to 150 charts, we'll narrow it down into 8 to 12 in total that he thinks are interesting and could have potential to deliver a positively geared reward to risk ratio if they start to set up intraday. So let's have a look at another one of the presets that Nate uses that he calls the dumper scan. So this is basically the parameters up here. And when you scroll through, it's stocks that are getting kind of beat up that might be on watch for a bit of a bounce. And as you can see, there are 3 pages here. And then what Nate will do is he'll create a scan every night that he puts out, at around 6 or 7 p.m. Eastern time. And he's going to recap the day that just passed trading and go through the stuff that he's watching for the next trading day and he thinks present the best opportunities, and he's got a plan for every one of them. And these are the stocks that I kind of put up onto my charts in the morning to make sure I'm watching the right kind of things that are in play. And often traders ask me, hey Cam, how do you know which stocks you should be trading? And really, the answer is in this list that has been painstakingly put together for all of our members every night. Wow, we're really getting through a lot this lesson. If you have been enjoying what you've been seeing so far, please give me a thumbs up. It really helps out my videos and also helps get me pumped up about making more content for free for you guys on the YouTube channel. Again, if you've got any questions, you can drop me an email. It's cam@investorsunderground.com. Or if you just want to chat about your trading or want to get on board with the Investors Underground community and would like to understand the best way to do so, I can help you out. I answer all the emails personally. Drop me a note and we can get in contact. So up next, we're going to be talking about news scanners and some of the things to kind of watch out for when you are trading news. So there are a ton of news scanners out there, and some are more useful than others. You've got different terminals, you've got different plugins for the brokers that all have some kind of feed where you can get news from. And it can be really useful to get breaking news, especially on stocks that you might be trading, and also maybe understanding a little what's coming up in terms of key catalysts of stuff you might be trading or might want to trade. But the news isn't always black and white. Sometimes some news that might read very positively will hit, but it won't be as good as people's expectations and the stock could go down. Sometimes everyone was expecting the news and took a position before, and when the news hits and you want to buy, you might be a little late to the party and people might be exiting their position into you entering your position. And lastly, often with stocks that have a catalyst coming up, a lot of the news can be priced in. So what you might see as a very positive press release may have already been incorporated into the stock price because they hinted at it a couple of weeks earlier or something like that. Nate, do you use any news scanners?
Personally, I don't subscribe to many news services. A lot of the services that I have do have news features. You can do filters for stocks that are on your radar so that if anything pops up, you'll be alerted, things like that. But most of the news that I pull or that I see or that I react to is from the chat room. We've got assets in the community that are really good at identifying what news matters. And that's all that I use. And that's what they're good at, and that's what they bring to the table. I'm good at technical type of trading, and that's what I bring to the table. So that's really one of the best parts about the chat room is there's a lot of different types of people in there, especially, for example, biotechs. Somebody can be great at news, but have no idea about FDA decisions coming up or what a certain approval or denial means for a stock, whether or not there's a chance that it's going to bounce and whether or not something's an overreaction. So we've got a lot of guys that are just really good at biotechs. So that for me is better than any news scanner and me trying to decipher, what certain words may mean. There's also live scanners, and most of these are technical based, at least from my view. You've got the high a day list, you've got equity feed, and like I said before, you've got the chat room. So high a day and low a day list, I get from Dash Trader, and a lot of other platforms do have it now, but it's really just a scanner that shows stocks that are hitting all the high days and stocks that are hitting all the low days. And I know it sounds simple, but remember, you're scanning at night, and you're seeing all these tickers that are on scan, and you're kind of fine tuning it from, thousands to maybe 50 or 40 results down to a handful of your most favorite names. Well, sometimes you're not really watching it, but then you see it on the high day list and it immediately comes back onto your radar. So that's how I use the high day list, just to kind of see where either the momentum is or where the selling pressure is. And if it's a typically slow day, you might be, looking at that to try to find some type of potential mover. Equity Feed is a great intraday scanner. It's fully customizable to provide you with really whatever you want to be shown, literally. And for the past year, maybe even 2 years, most of what I've been trading really just comes off the top percentage list and the top gainers list. The biggest movers, as long as they have a lot of volume. But it's basically scans at night and then just the top gainers, top percentage movers. And fine tune through there and get yourself a couple names that you're familiar with, and that becomes my main watch. And honestly, I really don't subscribe to many scanners anymore. I don't run that many scanners. If you've got too much going on, you're going to try to do two things. You're going to try to either watch everything and you're going to end up missing the trade, or you're going to try to trade everything that you see and you're going to screw them all up.
So Nate, I'm going to say that probably the best live scanner out there is a high quality chat room. And really the highest quality one out there is Investors Underground, and I'm not biased at all. But it just depends what you're looking for. If you're looking for a high quality conversation with no off-topic chatter that's moderated by some of the best in the biz, then that's really what we feel like we do here. Some of the free chat rooms online are kind of very low quality in terms of, people are taking positions and trying to pump them and saying stocks are going to the moon and all that kind of nonsense that can really get in the way of your trading rather than assisting it and providing useful information. So Nate's probably better at explaining this than I am, but Nate, what do you find to be the most useful things about the Investors Underground chat room, and what really separates us from the rest of the chat rooms out there?
Given the assets that we have in the room each and every single day, news traders, momentum traders, biotech traders, you name it, we've got it, and we essentially have all bases covered. We have breaking news to the second, as soon as it comes out, and stocks that are breaking out that myself and a dozen other traders may be missing. All it takes is one out of 1,000 different names to post that, hey, this one's taking off. And you immediately triggers in your head that, hey, that was on scan for a breakout. I want that on radar. I wanted to buy that. And immediately looking at, where a decent entry would be. Otherwise, I probably would have missed it. So really, thousands of eyes is better than just 2 eyes on a scanner. And, the focus is stocks on the move, momentum, and actionable ideas. And it's nice to know where the volume is coming at a moment's notice. Sometimes you just see one huge spike on a stock that maybe you're either playing or thinking about trading, but nobody really knows what's going on, and all of a sudden somebody posts it because they're monitoring it and they saw either another chat room alerted to buy it, or somebody on CNBC said something, whatever it may be. Again, it's all about the eyes all kind of working together towards one things. So besides my scanning at night, my main tool is the chat room. Twitter is fun. It's constantly changing. Honestly, it used to be a great asset. Now it's about 80% entertainment and 20% business. And that may even be a stretch. It's less about who to follow now. And when I use the word follow, I don't mean so-and-so bought, so, I'm buying too. As far as follow, I mean just who you're following on there, who's worth watching. And the best part about that is you can see why certain things are moving. If you have a particular stock that you're interested in, it has a great search feature where you can type in the money symbol and a sign. So, money sign XYZ, and it immediately pops up probably lots and lots of results in real time. And you can see, hey, did somebody just mention it? Did a newsletter just do it? What's the reason for the move? And a lot of times it's actually faster than, news services. Other than that, it's really gone downhill as far as quality. You should never listen to anybody on Twitter, and you should never ask for advice on Twitter. You'll get a lot of input, especially if it's a stock that's sort of in the gutter. I'm sure you'd get a dozen people telling you as to why you should hold. Just like MNKD, for example, Mankind, and AVXL. AVXL is a fun one. Anytime you mention it negatively, you'll probably get at least 10 people to tell you why it's going to the moon and why you should hold it. Meanwhile, they're down 50, 60, 90% year to date. So you should always be careful with that. But like I said, it's a great resource for finding out why things are moving at any given time. But it's just not a good place for getting quality, not necessarily advice, but answers to questions about tickers. A big part of what we trade is former runners, and people remember names. They remember what stocks run, especially in small cap land where the same junk just goes cycle through cycle through cycle. And what I mean by a cycle is, they push it, it goes from $1 to $5, pulls back to 2, goes to 3, and then slowly fizzles down to 50 cents, 40 cents, so on and so forth after a big money raise or something like that. And then they'll end up doing a reverse split. And we'll get into that later if you're not familiar with what a reverse split is, but essentially it's a restructuring. So for example, if a stock goes down to 50 cents, they'll do a reverse split. Let's just call it 1 for 10. The stock will now trade at $5, but you'll have 1/10 the amount of shares. So a lot of times this happens with stocks that we've seen over and over and over again, former runners that have ran in the past before, but they just keep on going in this continual circle where that stock that just did the reverse split that's now at 5 might trickle down to 2 or 3. And then it runs up to 5 or 7 or 15. And then it's just a slow, steady 6 months of fade back down to 50 cents and then do it again. So you'll start to notice that you see a lot of the same tickers year after year coming back up. And sometimes they even switch tickers. So that's another story, but it's also helpful to sort of know what the ticker was before, because if you know that it's ran before, it allows you not to basically underestimate it on the short side, getting in front of it too early and then ended up losing your shirt. Or at the same time, it could help you maybe have the confidence in a potential long to take advantage of the momentum that they're creating again.
Thanks, Nate. So people always ask, is there a list of former runners that we can send out so that you know which ones have gone before and you can prepare accordingly? And the answer to that is no. The library or full list of former runners is almost endless and always changing. If we sent out a list in 6 months, there are going to be 24 new ones and some of the old ones will be forgotten. I think the key is if you're in front of your screens every day, trading in the markets, often you'll be trading these names and they'll leave some kind of small imprint in your memory. And then the next time you see them on your high of day list, flashing up, making a move, you remember, hey, I traded that, a year ago when it was $5. Now it's 50 cents and it's coming off a lot of support with a lot of volume. It could be worth a trade. And I'm not trying to make a shameless plug here, but it really is another reason why Investors Underground Chat is a great spot. We've got hundreds of members in there during the day, And they've all got their own memory, some better than others, in terms of the former runners that have been active in the last handful of years within the chat room itself. So the chat room as a whole rarely misses a beat when it comes to former runners perking and having a subsequent move. So in terms of putting it all together and wrapping it up, you really got to work out where you fit in the market, and that will kind of guide you to which kind of scanning strategy is going to be best for you. If you're a very proactive person, you're going to focus a lot of your energy on preparation the night before so that you really know what you're going to be trading the next day. If you're a very reactive person, then you're probably playing with fire a little during your trading, but you want to maybe focus a little more on a live scanner and a chat room to kind of follow action and see if anyone's talking about stocks that you might want to be trading. And the last 2 points are super important: patience and diligence. Do you have the diligence to do your homework, go through all the charts, make sure you know what you want to be trading, and then do you have the patience to ensure that it sets up intraday and the chart represents a very solid reward to your risk before you enter the trade and commit your capital to it? So we really think we nail all 4 of these points in the Investors Underground community. For proactive people, we do scans every night. For reactive people, we've got the chat room. And the patience and the diligence is a byproduct of surrounding yourself with the best traders and watching the way that they do things and taking mental notes about how you should be acting when approaching the markets. So that just about wraps up today's lesson. The next video we're going to be putting out is going to talk about the ins and outs of choosing a trading subscription service. If you've got any questions from this video, or you just want to reach out about your trading, you can drop me an email. It's cam@investorsunderground.com. I get back to all of these personally, so if you want to chat, hit me up. This has been Cam for Investors Underground. Good luck with your trading.